Time for the market report. The grain rally continues.
This week, corn's the biggest winner in that, while cattle prices finally seeing some pushback. We'll get into it. But first, the numbers. What were the week's biggest gains and losses? And then some more USDA reports on our row crop outputs. And finally, as grain prices continuing to go up, an analyst tells us what we can expect from this. So, markets closed, once again trending up, this time with livestock split. Let's take a look. The week's biggest gain, corn, up 20.5 cents, nearly a 5% increase from the previous week. The week's biggest loss, live cattle, down nearly a dime. That's about a 4% decrease from the previous week. So, despite international issues affecting prices, we'll get into that in just a bit. First, some more numbers from the USDA concerning our row crop products, specifically oilseeds, grains, and cotton. Looks like production higher than last year. In the oilseeds report, soybeans crushed for crude oil in January 6.84 million tons, up over 7% compared to last year's 6.38 million tons. Crude oil produced 2.63 billion pounds, up 4% from last year. Canola seeds crushed for crude oil in January, up over 1.5% compared to 2025. Crude oil produced 167 million pounds, up 4% from last year. Edible tallow production about 81 million pounds, up 15% from last year, while inedible tallow production 282 million pounds, down 7% from last year. In the grain crushings report, total corn consumed for alcohol and other uses over 500 million bushels in January. Total consumption down 2% compared to last year. Uses included about 93% for alcohol, up 22% from last year. Corn for fuel alcohol down 1% from last year. Corn consumed in January for both dry and wet milling fuel production at about 92% and 8% respectively. In the cotton systems report, extra long staple cotton consumed on the cotton system 138,000 pounds, up 7% from last year. Total man-made fiber consumed about 18 million pounds, down 3% from this time last year. Total number of spindles on the cotton system, 573,000. January this year, active spindles down 3% compared to this time last year. In our row report, obviously the big news is prices affected by conflict in Iran. However, there are other factors at play affecting prices, namely trade. Market analyst Sue Martin characterizes the situation as China stepping in to buy out of necessity.
Well, I thought it was interesting because today, on Friday, we had Foreign Ag Service report a sale of 275,000 metric tons of corn to unknown destinations. Now, we've been having off and on sales going to unknown destinations. Of course, I tend to be an optimist, but I think that's Chinese. China needs corn, and as of the latter part of December, through the month of January into February, China had bought triple the amount of sorghum from the U.S. that they did the whole marketing or calendar year last year. And so, their weather was horrific, both in corn and wheat country. They started off very dry and then ended up in floods, and so bad that the government stepped in to help farmers get the crops out. So the quality isn't there. In the meantime, the hog production hasn't slowed down in China, much to the dislike of the government. It's increased. And so the price of pork in China, they compare it to the price of tomatoes, second lowest on record. And so, there just is a need for corn, but also there's a need for soy meal. Now, China doesn't tend to import soy meal, but on Friday, they made an agreement, and it was started back in January, but they lowered the tariffs down, I think, 85% on canola and coarse canola meal. I thought that was interesting, taking canola meal, because they tend to like to crush their own soybeans. And so they are importing beans. Of course, we know they're huge buyers this week out of Brazil. One thing that's interesting in Brazil is that the dollar to the real to the dollar relationship has gotten very narrow, 5.2, I think it is, to 1, which means that the farmer's not happy about that. He sells his beans in dollars, and therefore he's not getting as many dollars for his beans, and he buys his inputs in reals. Well, when they're going into harvest, they don't need inputs. They need money to pay for the beans. So they're not selling beans right now. They're being very slow to move forward. So we're probably 6 to 8 cents away from that high if you're talking a lead contract. If you look at the March contract specific, that high was 1172.5, but very easily to be struck this next week. You take those highs out, then you're starting to move this market out of that inside range for the quarter. And of course, it's real important how we close at the end of the quarter, which also coincides with the meeting between President Trump and President Xi.
And that's it for a deeper look into the markets. Things always get chaotic from a trade perspective during times of conflict. Hard to see what may be coming next.